Good morning. It's Harvey Jackson from XC Gray Marketing. Uh, Maybe do something a little wee bit different here and talk about inflation data from the U.S. as that is definitely an overhanging and weight on this market here as well. So U.S. Price index, I borrowed this from Standard Grain, as you can see here, but if you go back all the way to 2018, you can see how inflation has actually increased on a monthly basis. So, when you see the inflation flattening out, it's actually flattening out way up here, right? You still have inflation over time on a monthly basis. So that's a something just to take note there. As you can see here, Charlie Bello, just in the last 4 years, you could actually see the inflation and CPI and how it's increased over the 4 year time. So you can see one of the main ones that I'll point out right here is, food and at 21.4% over time, and depending on where you want to look at, you can actually see some of these things have actually increased by quite a bit over time too. So you got gasoline at near 60%, and then insurance, home prices, everything has actually increased. So just and that's over the 4 year period. What they tend to look at is over the 1 month year on year. So when you look at this, you go, okay, this is where US is, this is where Canada is, and at 2.7 month over or consumer price index over year, sorry. But every month it's increasing. So just take note of that it's always increasing. And you can see here, well, countries may be in some sort of uh, uh, economic decline, and these ones are in trouble as well at the other end. So being in the middle here is probably as best that we can be, uh, um, but it doesn't feel good. I can tell you that. NOPA is coming out at 11 o'clock here, talking about crush numbers, and I'll just maybe go through this a little wee bit here quickly too. But you can see their expected soybean crush for this upcoming year increasing, and you can see that there's an increase in expected crush, but you can see that there's actually exports are going to suffer here as well on the U.S. side. So ending stocks increasing year over year here, you can see, but it doesn't look that bad when you look at it as overall. So you can see globally, ending stocks are going up by some significant amount, and that's the bearish picture on soybeans right there. And if you look at who's contributing to it, and so you look at U.S. in kind of like fourth place of ending stocks, and yet you got China, Brazil, Argentina with huge ending stocks that are way ahead of the U.S. And the U.S. is actually kind of driving this picture right now. Here's just a stat or a USDA balance sheet, and exports are due to increase, but not enough to kind of chew through the whole ending stock situation. Here's the weather, and we've got some significant rain in the north there. That actually it's not beneficial for anything but the soybeans, of course. I think that it's actually going to help a lot of soybeans in Manitoba, especially at this time of year. Maybe get that top pod fill. So, uh, but at this time of year, with a little bit of harvest that's starting and such, it's probably going to be more detrimental than anything on those other crops. Here's the next 7 days. You can see that there's rainfall here. There's a little bit of a blank here, so maybe some harvest can actually progress in Saskatchewan area a little wee bit if the crops are ready. So we need the potential for the water or the rain to stop. I guess ideally the rain is hitting the soybean growing areas in Manitoba. The 8 to 14 day precipitation outlook, so it actually goes to near normal in the northern plains here, and then below normal in some of the key growing areas where soybeans and corn are grown, or near normal. And you're a little bit farther out, the 3 to 4 week, below normal just in the Kansas, Missouri area, way up north or way down south from us here. So uh, temperature anomalies above normal temperatures in the next 5 to 10 days across the provinces and going south of us as well, with cooling in the Great Lakes and south as well in the Ohio and the river systems going south, and that's probably going to be closer to ideal for growing corn and soybeans in those areas. So expect some more pressure on corn and soybeans as the yield is not getting suppressed at all, and their harvest is not happening. Temperature outlook, I just quickly went through that in the 5 to 10, but the 8 to 14 actually says the same kind of scenario there. And temperature outlook, benign, I guess, above normal in Texas, uh, eh, but that's not going to be a huge effect on the markets, I don't think. So if we look across the world, the other key area that I want to keep on pointing at is the other northern hemisphere harvest, and it looks like there's going to be some above normal temperatures in the European Black Sea region, and you can see moisture is kind of holding off in that area as well as a little wee bit of harvest is going, but it looks like there's a little bit of moisture there too. So, um, and that's so the moisture over there has actually caused some delays in harvest. So we'll see how that harvest progresses on a weekly basis here. Canola. So I had a couple of people ask me about whether this should be a buy in here, and technically there isn't. Even though we've got a couple green on the screen here, uh, we have not gotten any real technical signals or technical areas. Like I would say, the technical area to buy would be somewhere in this $600 level. So we're getting very close to it, but not quite there, or above the 10-day moving average. Rapeseed, that same story. We actually traded above the 23.6 on the short term, so that could be a potential buy there if we were able to trade that rapeseed, which we are not in most cases here. So, um, but rapeseed has actually held up some support. But our anchor and our problem with canola trading upside is this here. We've got soybean oil constantly still making lower lows here, and that is technically not sound for canola to actually uh, continue to trade higher. It's just an anchor on the market here, and soybeans as well, the same kind of story, pulling this market down. Wheat, same kind of story here. So if we look at corn, is actually created some sort of a bottom. Now, longer term trend is still down. Technically, it wouldn't be a buy as of yet. You would have to be very cautious and very you have to put in some tight stops if we're going to do any buying on any of the wheats or canolas. That is for certain. Same thing here. You got spring wheat. Actually, technical signal would probably be a buy up here. We're trading above the 10-day moving average, which is positive. So if we're to do something, it would be in the wheat. But just know that hey, it's not a bullish market as of yet. We haven't made any higher highs, and that's right at the 78.6 as well. Retracement value. You look at hard red winter, still lower lows, lower highs, and now going sideways is a great thing because that could encourage some buyers to come into this market and buy wheat because it wasn't any more expensive way back here than it is right here. Not in a great degree as we've seen when the market went from here to here. So of course the buyer wants to buy as cheap as possible, and if they don't feel like they're patience is going to beat them here. They buy at these lows versus these highs, which is not a whole lot of difference. Same thing with the Chicago wheat trading right at the 10-day moving average. Not a strong buy signal or any buy signal here as of yet. And again, just August 28th, we're going to have our model based, which is your NVDI greenness on the screen kind of thing, to give us an idea of yield. And that was captured in July, of course. And that's all I have for you today.